This conference will now be recorded.
Good evening, ladies and gentlemen. This is Intraday Trading Frank. It's approximately 8:42 p.m. on December 14, 2020. Welcome. This is our weekend webinar, delayed by a day, because the last one we did was on Thursday evening. So I figured best to do it a couple of days apart, and that would be today, Monday, December 14, 2020. These strategic webinars sessions are recorded, uploaded to the Intraday Trading YouTube channel for further viewing by all members, free trial subscribers, and anyone out there with the internet connection. So please feel free to pass the word. They're extremely helpful. Keeps you grounded with what's happening with the markets. We talk about some tactical forecasts, technical charts, as well as showcase some of the stocks that we are interested in or are currently trading. On that note, full disclosure, this is purely for financial education, not for any solicitation or advice. I'd like to keep this as brief as possible and cover some important points so you guys are all well informed. So the first thing I'd like to point out is this is a very, very volatile market. No question about it. And this is not just today. It's been happening like this for days now, if not for weeks. The overall general uptrend in the market is still good. No question about it when I look at the longer term charts. There is, on a short-term basis, the markets are obviously overbought, but that doesn't really mean much as long as the general directional bias is higher. So we're going to take a look at some of the, we're going to look at the Mcclellan Oscillator, we're going to look at the S&P 500, the E-mini futures, the dailies, the weeklies, and we'll even take a peek at the monthly charts to see whether or not we have any technical destruction, which I haven't seen. Now, saying all that, on an intraday basis, it's a different story. The markets are completely, and I want everyone to fully understand that, completely dominated by hedge funds who are day trading this market like no one's business. I've mentioned this quite a few times, and I want all of you to understand that. Technical charts are all fine and good. However, on a short-term basis, which are the 1-hour charts, the 15-minute charts, the intraday charts, or even sometimes the intra-week technical charts, which are very well set up, with all the levels, the support levels, the resistance levels, the ranges, and all kinds of other things that are constructed on top of my technical charts. They're all fine and good. But remember, volatility is not volatility is not something that you can predictively measure, forecast every 5, 10, 15 minutes. However, those ranges and those levels are extremely important because as long as they hold, then the market directional bias remains the same, which is still higher, at least till the end of the year. So that's number one. So as a trader, especially as an options trader, you have to keep in mind that if you're buying a Tesla like we did on Friday, and then the stock goes down a little bit on Friday, and you dollar cost average, or you don't dollar cost average, it doesn't matter, it didn't go out that much. And then it goes up, 32 points or more today from Friday. Well, you got to sell it when it pops in the morning, or you sit tight, because within a matter of 5, 10, 15 minutes, they jam it down. And we're going to take a look at that too. I'm sure people who are trading that particular type of stock, like the Teslas or the Netflix or the Amazons, know that very well. The fast-moving high beta momentum stocks. You got to manage your trades. There's nothing that anyone can do. Nothing that anyone can do other than you, who has to be responsible for keeping a very close eye, especially if you're dealing in high beta momentum stocks, and specifically tech stocks, to be honest with you. So there's no two ways about it, and I wish I could tell you that everything goes up in a straight line, and this and that. That's all garbage. The reality of trading is that the markets, again, I repeat, on a short-term basis, are very, very choppy. Look what happened to the Dow Jones Industrial Average today. We were up 279, almost 280 points. Okay, Boeing, which was a very nice winner, took some profits, towards the upper end of the range, gave back all of its gains and went negative. The high on Boeing today, and this is a highlight because it's a Dow Jones Industrial stock, New York Stock Exchange, large cap company, went up to $237.63 and ended the day at $229. Does that mean that Boeing's out of the picture? No. It simply means that the hedge funds are day trading stocks when they're popping higher. Some of them they're holding, some of them they're just taking the profit, scalping, and running, and just dropping it. So with the markets reversed today, from being up 280 to down 184 or 185. So if you add 280 to 185, it comes to 280, just to get an exact number. A little bit tired today. It's 465 points. We dropped 465 points. Okay, that's not a joke. From the top. Does that mean it's all over? No, because you're probably going to see a pretty sizable bounce over the next 24 to 48 hours, if not the next 24 hours, which will, most probably take back a good portion of that, if not higher. This is not the first time something like this has happened. It happens every week. So that's why today's caption or today's meme, if you want to look at it that way, is ninjas. These algorithmic high-frequency trading programs are ninjas, okay? And they'll slice and dice you, and they'll sneak up on you and take away all your profits if you're not getting, if you're not selling at the right time. There is no right time, but at least if you're not getting the bulk of the profits on a sharp moving trade alert, or if you're not in particular case, if the chart is still good, dollar cost averaging. And sometimes, and many times, it's nothing that you can do. That's something that traders and investors, but traders especially, and especially options traders, have to realize and accept. Sometimes you just can't do anything. But net, if you can minimize your losses and stay in the gain, or let's say minimize your losses on a very sharp drawdown on a particular indices, in this particular case, the Dow Jones, and then in the final hour, the tech NASDAQ futures gave in the last hour. They were holding up fine. They were actually the strongest sector today, and they still held up fine at the end because they were still up 0.7%. That's pretty remarkable, given the fact that the Dow Jones went completely negative, and the NASDAQ composite was up 0.5%, and the NDX NASDAQ 100 was up 0.7%, 87 points. Not bad. So that's what it's all about, okay? They're all about ambush, and believe me, maybe tomorrow's going to be the same way. So saying all that, let's dive in and see what we can do. Bear with me 1 second. Let's get this out. Okay, let's get this out. So reviewing what happened today. Futures right now are up kind of flat. Obviously you're going to see some follow-through selling in the Asian markets, and possibly in the European markets when they open around 3 a.m. our time, Eastern Standard Time. But saying all that, so this is the nature of the beast right now, and this goes all the way back to using a reference point, Thanksgiving. Okay, right there. So you have these patterns. This is what the markets were doing. It's very important for all traders to, end of the evening or end of the day, review their own charts and review these particular charts, because I always put the end of the day closing view so that they can get a, what's the word I'm looking for? So they can basically recap, all right, for a better choice of words, what happened during the day. So here we are, making a high. Let's change the color. Here we are making a high on the overall S&P 500. And the other thing I wanted to point out, and Jimmy and Paul were discussing just a few minutes ago before the recording started, was that the sector rotations between large cap tech, between value and growth, in this particular case, technology, for example, or biotechs, those are growth companies. These rotations, i.e. money flowing from one sector to another, are very fast and furious. They're happening within hours now, if not days. And in today, particular case was hours. All of a sudden, there's all this talk, the market always looks for a reason why it sells off. So the kind of manufacturer reason, well, whatever the case may be, was that New York would go into a total shutdown. I highly doubt that. Okay. But Mayor Blasio mentioned that in one of his press conference or whatever. And he says, we might go into a total lockdown. So what happens? The stay-at-home stocks ratcheted higher. Zoom was down a lot. We didn't trade that. I should have bought that at the lows when the markets were pulling back. And it ended down almost flat, down only $1.20. Netflix, stay-at-home play, went up big time. Okay, Amazon, stay-at-home play, went up big time. Tesla's Tesla. It's getting added to the S&P 500 and the S&P 500, S&P 100 index. Both indices are and the final day of addition is Friday. It's going to trade on those indices starting on Monday. So we played that very well from last week. However, it's extremely volatile, but the general tendency on additions to the indices are that there are a vast amount of shares. I don't have the exact numbers, but I don't know, Paul. I did have that, but I don't recall the exact number. But it's almost 5 times your average daily volume that needs to be added to the, in order for the fund managers and the institutional index managers to buy Tesla latest by Friday. So the upside juice is still on, but again, it's also quite volatile. On the upper, going towards still with an upside bias. So saying all that, so we hit this on or about on the 9th of November, which was last. Always have to have a calendar in front. 9th would be last Wednesday. Huge flash crash. Big reflex bounces. Then comes Friday. Things were going well for the first part of the day, and then straight down, almost hits major support levels, bounces up like a monster today. Market opens like a monster, and then pretty much around, and then starting around 10:30. So you're given an hour into the market opening. And these things are very critical because again, you all know this, but I'd like to remind everybody because the reality of trading is that just because it looks great in the morning doesn't mean the market's going to end great at the end of the day. And that's where this heavy-duty volatility comes in. And it's the same thing opposite. Just because it looks terrible, at the open, which have been some of our best days, that the market can end higher. On Friday, for example, the market opened up at 9:30 from a very sharp reversal pre-market. Okay, on Friday, and that was here. Friday. What day was Friday? Friday was the 10th. No, 10th was Thursday. So on so here we are on Friday. Let me see here. Right here, 11th, Friday, and then the market just ramps up big time. Okay, and ends very nicely. Let me see here. I want to get this date straight here. Actually, I'll bring this in. 11th was Friday. 11th was Friday. Hold on one second, please. Patience. 11th was Friday. So here we are on Friday at 3 o'clock. And then the market basically, yeah, that was 5 o'clock on Friday. So here was Friday. So it ramps up very nicely. Charts are looking great. And the follow through went through till today. Come 10:30, big sell programs start coming. Now these sell programs can very easily reverse themselves. It tried to hold here at this support line, tried to go up a little bit, failed, and then came the last hour drop, which was this very large red candle. And here we are right now. Here are the support levels. And I had mentioned that if we hadn't if we did not hold 36.44 or so, which it didn't, it slipped below that, then obviously we would have a sell-off. So here we are right now. Would you be surprised if we opened up here tomorrow? Because this again, at least technically speaking, it looks like a very large W. Is it possible that by late tomorrow afternoon we end up here back towards 3,700? It's absolutely possible. Absolutely possible. There's a lot of news coming out. You all know that. You have the electoral college vote, but the real official nomination of the next president is January 6th, when Congress and Senate basically ratify these electoral college votes. And there's a lot of confusion about it. There's a lot of political back and forth from both parties on whether these votes are valid and blah, blah, blah. I don't want to get into all that stuff. All I'm saying is that January 6th is the actual date, so there's going to be a lot of fireworks on that particular date. Okay, so that's your vol movements, as we call it. You know, this is a 1 hour chart, so we're starting at 10:30. We reset real fast. We were starting to go higher, and then we gave back in the last hour. At this point, from looking at this chart in a very simple manner, this is a 1 hour chart, so this will determine what happens in the first half of the day or the first quarter of the day going into tomorrow. We are extremely oversold. We have a minor positive divergence, so this says that even if we open a little bit lower, there's a very good chance that the MACD turns around and the stochastics also turn around and get overbought. Once it gets overbought again, who knows? We probably get another slam down, or maybe we don't. So that, in very simple terms, is the nature of the beast, which is algorithmic high-frequency trading, hedge fund volatility. Okay, next chart. This was your NASDAQ. It was doing fine. This was 2 p.m. This is your NASDAQ 100 QQQ. Beautiful cup and handle. Looking great. Had a pretty big breakout at 11, holding out great, and then the final red candle. And the NASDAQ succumbed to the pressure of the overall market dropping 100 points within a matter of half an hour, as you all know, the broader market. And that's where it is. So far, this gap has to be held. That gap on the QQQ is, here's your neckline. That's exactly where it ended the day, resting support. Here's your cup. Here's your handle. Major supports, 303 and the lower end of the gap. That's a lower gap, but this is the upper range, 303, lower range, 302. So 302 to 303 has to hold. If it doesn't, then this old gap, which the market fought and then took and then basically bust a move well over that, because this gap is a serious gap right here, right there. This is all the way back from end of November, right there. You can see it. It's very easy to see. This gap has been supported and held as major support and a bounce level, if you want to look at it that way. 1, 2, 3, 4, 5, almost 6 times. Almost 6 times. Okay, so this has to hold if we break down. If we do break this gap, you could see very fast selling on the techs. Just letting you know that. I don't know the reasons why that'll happen or whatever, but just letting you know. Very fast selling. So you can short once you get into the gap. If you short, then you got to have your stops at around the 302 level, because there's going to be, once it falls into this gap, it generally doesn't go straight down, but it'll try to hold. If it fails, then you're going to hit this major gap. And at this level, I expect a technical bounce. It has happened here. It's happened here. Might happen here if we get there, which I don't want to, obviously, being long biased. And the other very important point, and it's coming to my head, because I'm not scripted, so I'm just trying to remember the important points I want to draw, is don't go hog wild on one thing or another. Don't have way too many positions. Take profits, sometimes early, so what? It's money is money, right? Especially in volatile markets. And as an options trader, I'm specifically, targeting, mention this to options traders. And don't fall in love with anything. Just because a chart looks great, the way these markets are running, you guys know that very well. they just turn around and has one big red candle can destroy that chart short term, meaning for the day or for the day primarily. So just keep that in mind here, okay? So that's it. So that's your NASDAQ there. The best case scenario would be that we slip a little bit in the morning, a little bit. Maybe we test this gap, and then we make a run for it. That's your first neckline. These levels are levels of supply where the big selling came in when we had that huge flash crash last week when all the techs were falling apart. It was obviously a great buying opportunity. So will this red candle expand all the way down? Well, I explained to you where it can stop and where it can bounce from. We don't know yet. We don't know yet. And with Tesla's entry into the S&P 100 and the S&P 500, hold on one second. Let's text something. Okay, so basically, I lost my chain of thought for a minute. All right, so that's it. Then we have the stochastics. Yes, they're sliding down, but we'll need to see if it kind of does this. Comes down a little bit towards the 60 level RSI, and then bounces again. All that depends. Depends on how the price candlesticks react tomorrow. And so far, the NQ or the NASDAQ futures are looking good. Okay, next. Now, this is the daily chart of the VIX. This is very, very critical, and this is a slightly different variation than the ones that I show you guys most of the time. Okay, let's see here. And here's a very interesting part, and this is interesting, okay? The VIX, this is the daily VIX. So it's not your 1 hour, not your 15 minutes. This is the daily VIX. This is something that matters over a matter of multiple days, if not longer. So look what's happening on the daily VIX. I had shown this before, and I told you that once it enters this gap, this was the gap back from the COVID-19 initial crisis, that the VIX would basically try to ramp higher. That's exactly what it's doing. Now, at first glance, there are some downtrend lines here. So the first glance, somebody might say, hey, the VIX can go to 33. Sure, anything can happen. That means the market's going to fall 1,000 points. I doubt it. Why? Because the probability of that happening based on the internals, is low. Because very seldom have I seen the internals ramp up so fast, so quick, within a matter of 4 trading days. Within a matter of 4 trading days. Right there. Look at that. 1, 2, 3, 4. Sorry, today's the 5th day. So in 5 days, you have, and this is very critical, because these things, have been worked for me, and I just like to share it. Anyone can interpret it their own way. But the internal, which is the stochastics, have moved up so fast, so quick. And you notice that the last time, this was back in November, the VIX dropped from the 40 level all the way down, in between intraday volatility, mind you. But looking at it in hindsight, this is what it looked like. The markets ramped up 2,000 points because the VIX crashed. And we are almost at that level again. Make sense? Paul, Mike?
Yeah, thanks for pointing that out.
Yep, I just noticed it myself because I'm looking at my other one, the fast VIX, which is at 25 right now, and I'm going to show that too. But if you notice that, because the internals are basically giving us a level of percentage probability, mathematically speaking, as to whether or not the VIX is onto the 30 level, which can happen, mind you. Anything can happen. Or are they getting severely overbought? So at this point, the VIX is very close to getting the internals on the VIX, the stochastics, very close to getting severely overbought. And if this pattern, and patterns do replicate, if this pattern does replicate, then the VIX is going to drop like a rock, and it's going to hit back into that 22, possibly back towards the lower end of the gap, which is around 2174. That means the market is going to ratchet up 600 to 700 points from here. Now, can that happen on monthly options expiration week, which is this week? Sure. Can it happen? Can it happen by Christmas week, which is next week? Yes, it can. Absolutely can. So that's what would be the bullish, the bulls, or the people who are generally long traders like us, and many of you would look for, would desire. How about putting it that way? So just to be clear again, the VIX is getting severely overbought. Look what happened last time. This was back in during the Thanksgiving period. Look, crashed, VIX crashed. VIX up, down. That means markets went up. Okay, markets up. Is it possible that the VIX goes into back to the lower end of the Bollinger? Now, the Bollingers were very stretched at that point, I will admit that. But if it pulls back, VIX pulls back, markets go up again. The risk is the VIX, for whatever reason, there's a lot of black swan, minor black swan events, political events, economic events that can happen. We don't know. Chances of that happening are low this week. That's all I know. Could be wrong. Just explaining it. And the VIX ramped up towards 32, then it can shoot up, stay like that for a day or two, and then fall. Because these downtrend lines have been major resistances. That's it. Let's take a look at the S&P 500. Second. No, that's chart drawn. Pull it up, pull it down from my screen. Paul, let me know if it's on the screen. Yep, it's on your screen. So here's your SPX. Let's pull it up, the SPX, not the E-minis. And actually, let's look at the E-minis, the futures, because they're a little bit more of a dynamic representation of what actual markets are doing. So if you look at this chart, looks still pretty damn good. This was the bottom, March 23rd. This is where we are. Change this color. There we are. Just to draw, this was what I call the acceleration channel. The acceleration channel moves all the way up to 4,057, which can happen by the end of the year, which is just coming around the corner. However, technically speaking, it has to get back over this dotted line. And to get back, we almost got back over the dotted line on the 8th of December last week. And then we had 1, 2, 3, 4, 5. This is 5 days of these 5 candles. Now we're resting on the 20-day moving average. Let me try to expand it. Thinkorswim's not too good at this expansion stuff. Okay, anyway, you can see that. 34-day moving average, 50-day moving average. These things are still trending higher. I had mentioned to you that you know, we basically were a couple of standard deviations away from it. In other words, we moved too fast, too quickly from the highways, and now we're basically mean reverting, and so far it looks fine to me. And this looks like a this to me looks like a bull flag. Now I'll just show it to you. So here you have, and we have 5 days of a consolidation channel. There's your bull flag. And the internals are getting very oversold very quickly. 5 days of pullback on the overall market, the E-minis, S&P 500, and we're diving down pretty fast. In MACD, really no change. Mcclellan Oscillator getting oversold. Now that's your intermediate term picture going into the year end. Let's take a look to see what's happening on a shorter term basis. That would be the 1 hour chart. And this is what the 1 hour looks like. Chop, 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 heavy volatility, extremely oversold. Last time it was this oversold was on Friday. And then the markets opened up almost 260 points, 60 handles higher on the Dow Jones futures, and 30 points higher on the E-minis. This was today, till we started giving in, and that was at 10 a.m. in the morning. That's what I'm talking about volatility. 9:30, you got a good chance to sell a bunch of stuff, all green. Like I said, sell full or partial profits. I always do. So end of the day, even if you bought something on the pullback and when the market was trying to bounce, you are still not, you don't have that mental baggage and regret that you didn't sell when the markets had popped, because we don't know it's going to turn around at 10 o'clock. But generally between 10 and 10:30, the markets make a turn. And then they try to bounce. If that bounce fails, generally speaking, then the market will have a weak afternoon. Not the overall market. Could be the S&P 500 today. The NASDAQ was holding out fine. But I'm just talking in general. So this is what it looks like. You can see here that this is, there's no real definitive pattern on a short-term basis, just overbought, oversold conditions. So these levels here are important. Right there, 36.20. That was after hours on Friday, the futures. This is an important level, 35.93, but at one thing at a time. I would basically look at this level here at 36.20, which is roughly about 20 points, 25 points, about 200 Dow points or so, 180 to 200 Dow points lower before it makes a sizable bounce. Will it get there? Well, I explained to you earlier on, like there's some probability of it, but who knows? Who knows? We don't. Now, on the same note, let's take a look at the NASDAQ futures. They actually have a definitive technical pattern. Part of the reason for last week's huge volatility, as you know from my Twitter feed, from my Thursday webinar, was the huge amount of money that needed to be taken out from existing publicly traded companies to fund the new IPOs that were given to the institutions. So the DoorDashes and the Airbnbs and all those companies, they're talking billions and billions of dollars that needed to be funded. So a lot of regular stocks were used at ATM machines to take cash out. They were sold to come up with the money to fund those IPOs on a temporary basis. Games played all the time. When a very heavy duty IPO, initial public offering, comes into the market, it has to be funded. And a lot of that funding is done by hedge funds and some institutions by selling their a little bit of the existing portfolios, whether it be industrial stocks or technology stocks, in order to use that money to do that. So there's general pressure on the market now. These are just the mechanics of how Wall Street works, and that's just the way it goes. All right, so looking at this particular picture here, I like it a lot. It's a cup, it's a handle, and I believe it's going to break out, which it was attempting to do today. You have a double bottom, so you could be looking at this as a W pattern too. There you go. So on a net basis, I am more biased towards the technology part at this point, going into the end of the year, because that's where the growth is. That's what the stay-at-home plays are. All right, given the situation going on. Kind of funny that, Blasio is talking about shutting down New York on the day that the vaccine the vaccine was given to regular people, the COVID-19 vaccine, the Pfizer one. So it's kind of funny that they're talking about shutdowns and stuff. But who knows? Who knows? I've been hearing it that there are shutdowns in Canada and stuff too. So obviously there's some situation going on. So net on a shorter term basis, I'm liking the text. So on that note, let me just dive in directly on Amazon. Now, I trade Amazon time to time. I am not a long-term holder of Amazon. I just have traded time to time, or what I consider to be opportune times. And that has been since last week. And so far, it's done okay for me. Now, why? There's a very simple reason, and I showed it earlier on. Amazon at this point, for the first time in a bunch of days, oh God, I gotta talk to Thinkorswim about making these. Okay, let me try to get this back. Okay. Let's clear this chart. This has been posted, by the way, on my Twitter feed, so nothing new to see here aside from how I'm going to explain it. That's all. Just trying to clean this out for you all. So here's your downtrend line. That downtrend line is pretty much exactly at the 50-day moving average. There's Amazon's 50-day moving average right there, which is 31.85. We broke through it till the last hour, till the overall broader market pressure, selling pressure pulled Amazon down a bit. Okay, and for Amazon down a bit means it can fall 10, 15, 20 points in a matter of minutes, and you guys know that. So Amazon's high today was 31.90, low was 31.26, closed at 21.64. So this red line here, I find it, I believe, given the seasonal factors, given their price target raised to almost 4,500 today, I believe by Jefferies and RBC. Who was it? Yeah, two of the big firms. Whichever the case, they carry weight. So given the fact that it's traded below the 50-day moving average, 1, 2, 3, 4, 5, including today, 6 days in a row. 6 days in a row, Amazon has been trading below the 50-day moving average. And it's been below the 50-day moving average in general for a while now. It busted a move above that for 1, 2, 3, 4, 5 days till the 3rd of December, and then again back. The 50-day moving average for Amazon is moving sideways. You guys can see that. So what I think is a high probability move. A high probability move is Amazon is going to bust above, which it did today, I remind everybody, but it'll bust above, hit 32.49 because that was the last supply zone, 32.49, which is solid. So that's roughly 40, 50, that's 90 points from here. It can happen this week. Okay? That's a lot of money on those options. Options are cheap, but I told people to buy the 32.40 calls. They had a range today of $12.90 and $29. So buy whichever one you can afford, whatever the case may be, or buy the heavy one close to the money. I wouldn't go personally. I would play it for this week into December 24th because I don't want to go into January. because I truly believe that the first week of January is going to be heavy duty pressure on the sell side. For one major reason, the confusion that's going to come and the political skirmish on the January 6th Senate congressional electoral nomination vote ratification. So I wouldn't, but you can do whatever you want. You can go further out, but get ready to pay a lot. So whichever the case, this is a great tradable stock. I think the stock can be traded for 10, 20, 30 points. It was up 50 points today, even with the pullback. And on a short-term basis, this is what traders would like to see. Look at that. Stock on Friday, 30.75. Told you guys to buy it actually last week. And went well above 31.91 and holding here. This is looking like a $32.48 right there. Big sellers came in. Okay, so I think it's a great trade, and yeah, so that's it. Next one is Netflix. It's very much a range trading stock. I'm going to show it to you on my there. It's a little bit overbought short term. Hold on one second. Got to bring this screen in. There we go. There we go. Much easier to see on quad. Drawing tools, erase all drawings. See, quad, one of the greatest things about the quad platform, the QEOD platform that that I use as one of my charting platforms, is the ease of how you can see these things. So look at that. Let me adjust the lines a little bit. There we go. There we go. So this is your Netflix basically. Again, see these type of pullbacks you get around 11 a.m. Bang, the stock will be down like 16 bucks for no reason. But the general trend, if you look at it, is higher. It is a very choppy stock, but there's a lot of there's a lot of power in it right now, given what I explained earlier on. This is your daily, and the daily is looking pretty damn good. Let me see here. It is breaking a major range. Today's candle was a very fat bullish engulfing candle. Right there. I'm just trying to clean it up for you guys. Right there, today. That's big. So what's the next stop? Well, somebody's really bullish will say the next stop is all the way up here at 560. Right there. Is it possible? Absolutely. 1 second. And if there are some lockdowns, Netflix is going to go higher. No question about it. No question about it. This line, dotted line is always the pivot. So it bounced exactly off the pivot. And here's your. So if you want to look at it this way, in a very simplistic way, this is what Netflix does. Options are not crazy expensive. And I think you can trade this stock up for 10, 15, 20 points all the way up to 560. Next one I'm going to show is AMD, which should be here. Bear with me 1 second. Clean this out. You guys with me so far? Mike, Paul? Can you guys hear me? Yep.
Yep.
Okay, good. Now, AMD's chart is very bullish. There's no question about it. Stock held out very well today. We traded it. We got back in again at a higher strike. From a technical standpoint, it's a very bullish chart. Now, this is also a stay-at-home play because, lockdown, people, there'll be more sales of laptops and gaming thing, and AMD is the master of all this, a master of making those components. So just in a very simple chart pattern, you have a W formation. kind of a little complex W, but it is definitely a W formation, which is also a cup in a handle, and the breakout today. So upper end of the scale, and the call that they're cheap. Yeah, they don't move like 500 points a day. I mean, 500% a day, but still, you can make anywhere from 40 to 60 to 70% if you're situated correctly the day prior or earlier in the day before it starts moving. So 97.51, next stop. Acceleration channel measures up to, again, the round number of 100. And best case scenario, 1 second. Clean this out again. Best case scenario, you basically, I mean, over, let's say, by the end of next week, maybe in January, whatever the case may be, this stock, once it busts a move over the previous high, you could get a move up to the 101, 102 level very quickly. Everything else looks fantastic. So AMD is looking pretty damn good. AMD is looking pretty damn good. Rest of my picks, some of them, it's all on Datadog, looks fantastic. All of them are on the real-time Twitter feed, so please take a couple of minutes. I don't want to, keep on showing the same things. And you'll find them all there. Paul, you have any quick comments on the text, and what are you thinking?
Yeah, I agree with what you said, Frank. The stay-at-homes and these techs have been red hot for 2020, but they've been really resting for the last 3 months. So they've got some momentum. I mean, they're coming from the bottom, I think. So they got room to run here.
So when we look at it, let's say look at the Qs and let's look at the daily. So basically, yeah, I mean, what you're basically saying is that since September,
yeah,
October, November, December, yeah, you're right. So basically for the last 3 months, let's look at this. We've been trading in a wide range. The range, we broke higher above that, created a new high. So what you're basically saying, which I agree with, is that as long as we hold these important trend lines like the 20-day moving average, the 34-day moving average, we actually don't want it to come back inside the range. And this is the range I'm talking about. You can see that. Let me just use the drawing tool so it's easier. This range, for example. So Paul mentioned a very good point that since September, we've been trading for 3 months now, more than 3 months, in a range. We broke out of that range. And when you look at the upside on the big monsters, whether it be Apple, whether it be Netflix, whether it be Facebook, whether it be Amazon, the upside is pretty tremendous. They're well off their, most of them are 8 to 15% away from their all-time highs. So that's a very big, important point. So a range breakout of this magnitude, which occurred at the end of right around Thanksgiving or so, right there. It happened after Thanksgiving, end of November. If it can hold that, which I believe it will, then you have further upside towards the 320 level on the techs, and seasonally it's a very strong time for techs. That's a good point. Okay. VIX. Let me just show you I showed you the VIX on the daily. This is the VIX on the hourly. Same story. I posted the chart a couple of times today. This is your intraday movement on the VIX. Let me clean up the screen up for you guys. And this is what happened today. Okay, I called the VIX a bunch of times when it hit this level. And but here was the difference. When it pulled back, yeah, it hits the upper end of the level, gets severely. Now it's getting pretty severe overbought. The slow stochastics, for example. You can see that right now. It doesn't mean it can move sideways for a couple of hours, but one or the other, it will have to reset. And when it resets, see the VIX fall again back towards the 23 level. And at that point, if it's oversold again, if the stochastics are oversold again, there comes the market sell-off. So basically, the VIX, this is basically a complex inverse head and shoulder. Somewhere around the 23 level, it seems like the buyers come in. So buyers of the VIX, the machines, when they come in to buy or add the VIX as a hedge, then that means the markets are going to drop. So I'm going to be looking for any large red candles. And if they hit any one of my support levels that I've shown, that are drawn here with markers, then at that point, you need to manage your own book and not get too excited. You need to take some nice profits off the table. So this is what it looked like today. Very large pull up, spike, bullish engulfing candle at 3 p.m. See, it was coming down. It was doing real well. It had an inverted hammer. Pull it back this way. Look at that inverted hammer till 2 p.m. and 3 p.m. Bang. Took it out. So at this point, wouldn't be surprised if we hit this massive resistance again, which is the 25 level. That means the market will open down a little bit in the morning, which would be great. I like markets when they open down in the morning on certain days, so we can pick up things on the cheap. Or I like it more when it opens up a lot and we sell, and then we can hopefully buy it cheap. What I don't like, but again, my liking or your liking doesn't control the market, is when you buy something that looks, by 2 p.m. everything's looking fine, and then the few things that you bought, boom, everything looks like crap by 4 p.m. because something like this happens. Okay, just explaining it very simply. Let's look at the Mcclellan Oscillator and we'll call it a night because I covered quite a few things in one go. I want to keep it reasonably brief. All right, let's get this out. Mcclellan Oscillator. Let's go here. Now, I haven't seen this for tonight, so this will be nice to share it with everyone. The unveiling of the Mcclellan Oscillator. Come on, come on, come on. That's not what I'm looking for. 533, no, this. Okay. Let's dress this baby up. Nope, have that. Have that. And now, drum roll, and here we go. Oop, forgot to put an area. Okay, beautiful. Now we have the real drum roll. So are we with the oscillator right now? Liking it so far. It's the daily oscillator. A couple of things here stand out to me right away. I'm looking at this for the first time with all of you. And what am I looking at? I'm looking to see whether we we did a lower Bollinger overshoot. That means we overshot the lower Bollinger, just the way it sounds. So at minus 1207, I'll take that. This is I would consider this to be negative. Oh, come on. I would consider this to be somewhat positive because it's getting very oversold. So this is what we call pattern recognition. Back in late October, when the market cracked, boom, down, the Mcclellan Oscillator, if you remember, went to 76. The full stochastics went all the way down here to possibly like 4. We're almost at 6 right now. Yet, if you look at the actual oscillator, it's only at minus 2.2, minus 12. So that is known as a positive divergence in a big way, because internals are almost almost, not quite, but almost as severely oversold as we were. But at that point, the markets were down a lot more. A lot more. The markets are down slightly. We're down 5 days in a row overall. Lots of intraday volatility primarily. So this to me is pretty damn good. Doesn't mean everything's going to turn around tomorrow and just run. I hope so. But what I'm seeing here from a directional bias perspective is that there seem to be quite a bit of hardcore selling, and yet the markets didn't crack. Hardcore selling underneath the surface, yet the markets didn't crack that much. So that to me is a positive divergence. Let's look at this on the weekly. In simple English, this is looking like, like a good short-term opportunity. So what are we seeing here? The weekly, I can't really decipher much because, let's see here, because it's down here, but this is starting to come down right there. And this seems to have a double top. So I'm not even going on the weekly side. That's the reason why I said what I said is whatever I'm going to do, I'm going to try to keep my money and profits in the pocket till the end of the year. Because January 6th, I repeat, is going to be a very tricky time in the market. Hey, Mr. Pester.
Hey, Frank.
How are you?
Good. How are you?
Good, good. We went through a bunch of stuff, so we're kind of winding down. Any particular stock you want to see right away before I close out?
Did you do Netflix and Amazon?
Yes, I did. I did
Okay.
that. You just have to rewind back when I uploaded. I did Netflix. I did Amazon. Tesla is really not much to do. Oops, what happened here? But I didn't do Tesla, so I'm going to show that too. We did well on that. What happens this? Okay, I'm back. So let me I explained a lot of real important stuff about how to handle volatility movements, so you can rewind that and listen to it too, because this market is a ninja market, as we all know. So what looks great at 10 o'clock doesn't always look great at noon, right? All right. So here we have Tesla. From a technical perspective, it looks like, well, and I also explained the dynamics on Tesla in addition to the S&P 100 and the 500, so you can listen to that too. So basically, we got a top on Tesla at 654. Can it bust a move very quickly over that? It sure can. So, but again, active traders only. Chart-wise, it looks totally fine, but there's a lot of buying pressure because of the addition to the indices, right? For S&P 500, S&P 100, that's an artificial pressure. But so far, if you look at it this way, I personally think it blows above 654, possibly gets on a very fast basis. I'm talking maybe 15 minutes, maybe half an hour. It can move as high as 660, 670. And let's see, so that's Tesla on a, let me just do this on a 1 hour. Take this out, clean this out. Okay. So yeah, so 670 is the upper end of the range right now. This is for traders, 670. Lower end of the range is when the, is basically 575. Shorter term basis, lower end of the range is 600. Upper end of the range is, again, 640. So you can trade the stock for somewhere between 20 to 40 points, but you got to be quick. And because it can very suddenly just drop 20 points, you know that. And then, all of a sudden your option profits and your premiums are gone. I covered AMD, so that was already covered. So I think I covered a couple of, choice moves. Regeneron, the chart's already put out on my Twitter feed, so please take a look at that. That's a swing trade coming off the bottom, so not as much as a day trade. The worst thing about Regeneron that JP knows and I know and people who trade it know are the option spreads, right? Absolutely horrific, right?
Yes.
I mean, it's just crazy. Like you're talking about $3 spreads. Yeah.
Yeah.
But then they started to narrow it today, which is nice. So that means there's a lot more liquidity or whatever the case may be. So if it's a buck or two, I can handle. When it's like $3, $4, you're like biting in the middle, trying to get, a piece, buying a couple of calls. I always try to test it out by throw out an order for one call and see where they bite. So I know where the sharks are. But that's one of the problems we run with these biotechs. What else, Paul? JP, any other stock quickly you want me to look at?
Did you do DraftKings?
No, I didn't do DraftKings. Let me just show you DraftKings. I think I have a nice chart. I don't have DraftKings already drawn out, so second. What's this? Pull up. Let's take a longer view of DraftKings. Here's your trading range at DraftKings: 53.9. Let's say 54. Short-term trading range 51, 48. 3 points. Larger trading range, like I said, is 48 and 54. So if you can manage to trade that 2-3 points, all DraftKings is doing right now is moving sideways. Okay, once it breaks over the 54 level, it's been moving sideways since sideways for with a whole bunch of points in the middle, but still we don't get a breakout till it breaks out over 54. But I'll take $4 any day from here to there. Let's take a look at the daily. The daily still looks great. Nothing has changed on the daily, and that's one of the very important key things that I talked about, JP, on the first part of this webinar, which we all know, but it's always good to explain it in simple terms about the nature of intraday volatility versus longer term setups. So the longer term setup on DraftKings, totally fine. 53, this dotted line here is the gap. That's 55 right there. Yeah, chart looks fine. I mean, on a longer term basis, the chart looks like 60, basically going back to its highs. Lines are good. Internals are good. Yeah, the longer term chart on DraftKings is A-okay. Short term, back and forth, that's, this stuff that we have to deal with. Look at this. Cup, handle, doing fine. One last one. Go ahead. Any come to mind? You want me to look at? There's a lot of, some of these biotechs are going nuts, and but tough to cover all of them in one go. Nothing else comes to mind?
Hey, Frank, you want to look at Lockheed Martin? I thought it was a good long-term setup.
Sure.
LMT.
LMT, yeah. Lockheed Martin, right?
Correct.
Yeah, okay. So basically, from a technical standpoint, the stock is just basing, and it's basing between, well, you can see that, between 345 and the upper end of the range is obviously 401. There's nothing really, it's definitely oversold. There's no question about it. No question about it. It's very oversold, but it's basically a range trading stock till it breaks out. Upper end of the range, I would say, is this. This is the wide range, yep. And this is your short-term range. Stock needs to basically break out over 384, has to break out over the 50-day moving average right there, 370. So over 370, you're going to see a flurry of buying, automated buying. So, but then it's also got, you know, from a trader standpoint, it's also got the downside of 344 still left open. And that would create a massive triple, quadruple bottom. Let's take a look at the weekly, what it looks like. Weekly doesn't look that good. Weekly tells me that the stock will most probably retest, you know, a couple of points, nothing crazy. 7 points, possibly 344, because that's what the weekly looks like. I would look at the 1 hour chart. Okay, see, for traders, this is a good stock because Friday, the low was 354, and being a heavy duty industrial aircraft, I mean, defense stock, when the markets opened up today big, that was a nice trade, 354 to 365. So the 1 hour chart makes more sense to me from a tradable standpoint. And then, of course, I showed you the daily. So net, there hasn't been any major technical movements by, you know, the big institutions or whatever, as we saw on the daily. But from a trader standpoint, the stock can be traded very nicely. So can Boeing, you know, so can Boeing. So, JP, any others while you're there?
Did you do Biogen? BIIB?
Yeah, I know that. I showed Biogen. It's another. Biogen, the daily has no signals. I mean, yeah, it has a signal. It's basing. It's been basing for a while. What happened there?